Good morning, traders. Welcome to Saturday morning coffee and charts with Newbie Trader. I'm your host, Matt Brown. Appreciate you tuning in for this session today. Hopefully we do this, if not weekly, at least a couple times a month. And if people want to show up to our live trading room on Saturday mornings and ask questions, that is definitely welcome. But what we will do is just today, I'm just going to do a little bit of a technical analysis walkthrough. Today we're going to focus on the S&P 500, but the techniques that I'm going to talk about today is applicable to any market and any time frame that you choose. Now, I'm not going into our trading tools today. Obviously, for those of you who trade with us on a regular basis, know we use a special NT-RICO chart on an intermediate and shorter time frame basis, and off of that we have signal tools, etc., etc. But today we're not going to focus on that as much. I'm just going to pan out to a longer time frame. This is actually a 30-minute chart here, and I'm going to walk you through kind of how you keep track of the active fractals. Now, many of you know we have a system we call the Ultimate Fractal tool, and it's a signal system, and it's based off of the swing high, swing low, trading the momentum in the direction of a trend, and we have, I don't know, 20 or 30 hours worth of training online that goes with that software. I'm not diving into that, but one of the key principles that we assume that folks trade under is trading in the direction of a move. And with that, I'm talking trading in the directions of higher highs, higher lows, lower highs, lower lows. And I'll step you through a process. And today we're going to dive in a little bit to Fibonacci use and how I use that along with this. And each one of these I'm going to just try to maybe do a short little deep dive into one topic matter, and we'll post all these videos on our member site, and we'll also make them available publicly on YouTube, whatnot, on our channel. But it's not meant to be an all-encompassing training video that covers all areas of the market, but we'll just take a deep dive into one little specific technique that we use within our system, and how it can be used on any system, and just give you some food for thought, maybe generate some questions, and then we can answer these questions on a later broadcast, or if we're live and you're here and you're asking these questions as I'm presenting, we'll obviously address it in the same video. So that's kind of the format I'm going after. If you are a member of our trading community at Newbie-Trader.com, I would ask that you start showing up on Saturday mornings. We'll do this typically around 7:30 to 8:30 a.m. Eastern Time. And if you can't make it, we'll try to put together a recording. We only had a few people show up on our first session here, and to get the most out of this, we want to definitely have some live interaction. But as we get this started and get ramped up and actually get our office hours set, this is to be expected. So in the future, reach out to me at mattbrown@newbie-trader.com if you have any questions, and we'll just plan on having coffee with charts Saturday mornings bright and early, so you can get on with the rest of your day and weekend. So, all right, with no further ado, let's get started. All right, so we are actually going to walk through a little bit of this most recent trading week, and today is Saturday, March 24th, 2018, but I'm actually looking back an entire week all the way to the previous Thursday and Friday leading into this week, because that's really where this range starts, and that's where our discussion is going to start. So if you look back here on Thursday, at the top of the chart here, we have a nice wick, and I marked that high with this dashed white line. Okay, so for all intents and purposes, think of that dashed line as our current ceiling. All right, and down here at the bottom, you can see as the market moved down over the course of a few hours on Thursday into the close. This is 2 p.m. on Thursday, and you can see here I kind of marked the floor again with a white line. Okay, so we're going to use that kind of as our starting point for our discussion, and then over here is kind of the close of the market session, 4:15. From here, where my cursor is, all the way over to this green box you see here. Okay, that green box is the 9:30 open. So this whole area in here would be considered overnight trading hours. Okay, and then the market opens. So on this chart, I am showing 24 hours worth of data. Okay, so as we open up on Friday, up here I have a red dashed with 2 dots. It's I'm going to call that my active fractal. And the reason that's going to be my active fractal is as I scan the chart to the right, once our floor was broken, okay, you see that once the floor was broken, we actually come through. I don't know if you can see it so well on your charts, but we did tick through this area. This becomes our most recent swing high point. It was, again, all day Thursday and Friday, it was kind of chopping back and forth even through the overnight. So as they break through this floor, this now becomes our active fractal. Now, before we get too far into that, let's just kind of look at inside this trading range. It doesn't mean there's not things you can do. So I'm going to just draw the Fibonacci from this swing high down to this swing low. And one thing we look at is a pullback into what we call our ambush zone. And basically we're looking at the 50, the 61.8, and the 78.6 Fibonacci levels. And there's also a 38.2. So I have 4 levels on the chart mark. 38.2, the 50% retracement, 61.8% retracement, and the 78.6 retracement. So as the market bounces up into this 50, 61% area, it rolls over, it comes down and hits our first target, and we have a minus 23% fib level, which will be a 23% extension, and then a minus 61.8, which is basically the way that we like to do things in the newbie trader workshops and style of trading. When we're trading off of fibs, we like to pull back into this ambush zone and start looking for an opportunity to trade in the direction of the move, the move coming into it. And we like to take our first targets off prior to the original swing low point. So that would be your first target. We like to take our second target off at this minus 23% fib level. So this would be your second target area. And we like to take our third target off at this minus 61% fib level. So that would be your third target. So all things being, kind of set aside here, not any specific trading system, but just Fibonacci's in general. We like to get in at one of the key fib levels, or at least after a reaction off of those one of key fib levels. And then we like to take profits no matter how you get in. We use our fractal tool and signal tools for getting into this on a shorter time frame, but we wait for the market to come back at least to one of these levels, and then we look for targets at the swing low point that initiated it, our T2 line, which is minus 23% fib, and our T3 line, T meaning target, minus 61.8 fib. So when you get that type of reaction down, okay, we consider these to be what we consider a measured move, right? It comes up, we get a fib move down into one of our target zones. So once you get this reaction down, up, down, and you hit at least the T2 target, we consider that to be a measured move. All right. So what I like to do is then step that fib level down to that next swing low. And now we're operating at the next higher time frame. So now you bounce, the market comes back up into that 50 to 61% retracement. Same thing, you have a target here at the swing low point, you have a target 2, and you have a target 3. And if you notice now on these larger time frames, see how people are taking profits at target 1. The market comes down. What's it do? It bounces up. Taking profits at target 2, bounces up. Take profits at target 3, bounces up. So these levels are key levels in the market, and it's not just happenstance that we use them. These are levels that other people are watching for targets as well. And these are all profit-taking bounces off of these key points. That's why we use them. Okay? So the one beautiful thing about Fibonacci's and symmetry and things like that, they're fractal in nature. And what do I mean by fractal? They're applicable on every time frame. So we're looking at a 30-minute chart, but folks that are trading these other levels might be looking at hourly charts, 15-minute charts, 5-minute charts. They might just be looking at price action. But fractal means they're you can multiply them across many time frames. And that's kind of the whole nature of what we do, because not only do you have this original series that you can keep pulling down every time you hit a target for these measured moves, so you can keep pulling it down, pulling it down, pulling it down, and waiting for a bigger time frame retracement, but also just looking at these moves within the move. Okay, so like this pullback, this is its own fractal or its own Fibonacci retracement as well. So this one you pull down to right here, the market bounces up to its 38%, and now you have an overlap. See how this T2 target lines up with this T2 target, and then here's a T3 target. That's why when you're trading, sometimes you will see, let's say for instance, you're trading this longer time frame, and here in this instance, the market made it all the way down to your target, almost to the tick. But there's times when you're trading where you're sitting there waiting for that target, and it almost gets there, almost gets to your target, and the market reverses. Let's say that it doesn't come all the way down here, right? So it's within 2 or 3 ticks of your target, and the market bounces, and people refer to that as front running or something like that. Well, what's really happening is maybe there's another time frame that's in more control of the market. Now, in this case, that was not the case, but let's just assume that we're looking at this Fibonacci retracement right here. And if the other time frame was in control, they might be taking profits here at 27.47 in front of your 27.46 quarter. So it might be just 2 ticks in front of. So that's why you'll see that sometimes. So as a rule of thumb, when you're doing your trading, and we're looking at these measured moves, or any type of key level that you've identified on the chart, you'll want to make sure that you always give yourselves a few ticks leeway for profit. If it gets to it and you see some major momentum the other way come in, you'll want to make sure that you don't just sit there and hold that and not take your profits, because you might be fighting against a different time frame that is taking profits that you were not aware of. So let's move on. So once we broke this floor, once we broke this floor of this tight trading range from last week, we can look at where is our active fractal. So as we come down and we pierce here, right before this long red bar, once we pierce here, your active fractal is where I have it marked. But then you see that the market bounces, so the floor actually changes to here, right? So we move the floor down, and once we break this new floor, your previous pivot high is all the way down here. So your active swing high point is now this little marking right here. All right, so same thing we were just talking about. If you look at this little swing, and it's not little, it goes from 27.50 down to 27.34, so it's actually a huge move. If you put a Fibonacci retracement on this level. You can see that the market bounces. They go up and they do a retest of the new floor. Right? They do a retest. And so what are we looking for? And in general terms, I think most of you probably know this. We'd be looking for target 1, which is the swing low point. We'd be looking for target 2, which is this minus 23% fib level. And we'd be looking for target 3, this minus 61% fib level. All right. And you can see after the market bounced, it pulled back into this ambush zone, tested the old floor, and it went on to those targets. And you'll see this over and over and over and over again. Okay. And now we're getting into Monday's trading action. So we're just now getting into this week. But this is the homework you need to do prior to heading into any trading session. You have to kind of look back a couple days and see, okay, where are we in this marketplace? So now, since we broke this floor and we have our active swing point, right? The new floor becomes here, right? And on this bounce, once they break through the new floor, this becomes your active swing high fractal. So that's like your key major resistance point. All right. So we're just stepping through this. Okay. So we broke the floor. We have our active fractal zone, which becomes kind of the new ceiling, if you will, right? We had this old ceiling way up here, but this new ceiling, that's when you get a real trend change, when you finally break this level. So let me just get rid of these intermediate fractals. So now you break, now you got a new floor, right? A new floor, since you broke, is all the way down here. Okay? So once we broke this floor, that became the active high or the active ceiling. So that's our current active fractal swing high. And now the market is bouncing. So you can look back at this week and you might ask yourself, well, why was this such a difficult trading week? Well, I think you're going to see here pretty soon why that is. So you see where our active fractal is, right? So until we get currently above this level, and that level's, we're going to call it 2745. It's, I think, 2745 quarter. And that is kind of the open of Monday's week. But unless you get above that level or below this level, you're basically in a sideways market, right? There is no trend until one of those levels are broken. And so if you just look at the trading range here, we kind of came all the way down, set this floor in place, and they started coming up. Now you can put Fibonacci's on this, right? Going the other way, because it's a big enough range. You can trade it. We're looking at a 30-minute time frame here. So we measure this first bounce to the upside, didn't even pull back to the 38. At a minimum, you want to see it come back to that 38% fib level, and you really don't want to see it go through the 78% fib level. All right, so nothing yet, nothing yet. Measure up to this point right here. All right, now you came back to your 38%. Okay, it's kind of in a range, and you can see, okay, came down into the 50%. So the market's trading between kind of this 50, 61% long short-term trade, counter trend move, and the 61% down move. So the market's just chopping around. That's what you call market chop. And you can play these rotations, but you just have to realize you're not in a trending market, right? You're in a range-bound market. So right now, we're still, you know, from this move up, you kind of got a intermediate ceiling here at the swing high point. You have kind of a low here at the 50% fib. It's just chop, chop, nothing going on. We're into Tuesday, Wednesday, still chopping around. All right, now, interesting times, right? We have the FOMC coming out on Wednesday. So I'm still have this downside move. We'll still pull it up to the swing. You know, we'll pull the downside up to here. Now we're getting ready, and it's Wednesday, and the FOMC comes out. Well, look what happens. Remember I said you really don't want to get beyond the 78%. This gray line you're seeing right here was that bigger picture down move we had. Remember where we had that old ceiling, the old current active fractal, that was 78%. When it goes beyond that, you really don't, you consider the trend broken. But because this bar right here that you see is a news announcement, this is the FOMC, that's just head fake. So I'm going to go ahead and draw this Fibonacci, pull it all the way up to here. That was the head fake as the market went up on the FOMC announcement on Wednesday, and it immediately came down within this 30-minute candle. You can see it basically was a non-trade. If you look at the 30 minutes going into the FOMC to coming out, it closed exactly where that 30-minute bar opened. That's why you just see a line here. I apologize. I have an overzealous dog. We live on a court, and a car drove down in our court cul-de-sac and turned around, and obviously my dog was protecting us. So if you heard that, I apologize. I am recording at home here. So let's get back. Where was I? So that high point on the FOMC was just a blip, right? That was just a news announcement. So I'm not as concerned about it piercing this 78% fib level because it was a news thing, and that's to be expected on major news, non-farm payroll, FOMC, the major news announcements. You will sometimes see a spike like that. We're still going to use that level going forward, but at this point, the fact that it spiked up there, it did not break our old previous fractal high. Remember that. I said until we get either outside the active fractal, this red dash dot line, or break the floor, we're still in a range environment, even though it's a big range. So there was the move on the FOMC day. And then this is pretty interesting here. I think you're going to find this pretty interesting. Okay, so remember the low of this swing point is coming off of the floor, right? If we go all the way over here to where we started this, we have this fib coming down. We have some major moves to the downside once we break the floor. And we have a fib coming up if we break the high. Look at this 2707 area is the 78% fib level of this bounce into chop that we've been in, right? So if you look at what happens over here after the in the overnight session of the FOMC day, right here was the FOMC spike. You can see the market started moving down, and I told most of you in our room even before Wednesday, I said you're going to get a reaction, but whatever move we get off of that reaction, in this case, you had the spike, but then you had the, leading into the FOMC, we were basically here, right? Coming out of the FOMC, we're down here lower. We're making lower highs, lower lows, okay? So I told my members and I told folks in our room before Wednesday even started trading, whatever that direction is, in this case, that direction is down. Look for you to have some follow through the next 2 days in that direction. And that's a little hint for you. That's kind of the way the FOMC works. When you get a good move, you usually get a 2-day follow through on that, and you can exploit that direction. But anyway, back to what we're talking about. So in the overnight session, coming off the FOMC day, we break that 78% area. That's an indication that this market may break down. All right. So just note here at the end of the trading day on Wednesday, heading into the close, we broke the 78% of this fib that was coming up that lasted, 2 or 3 days previously. We came off that low Monday evening, and for basically 48 hours, we bounced up to that level. We broke it. I'm going to go ahead and remove this fib just to clean up the charts, because we're still, for all practical purposes, in a range. If anything, we have downside momentum. But I do want to look at this FOMC because people I know in here trade that. And so we had the spike up on the FOMC. So you take your Fibonacci tool, you go from the swing high down to the swing low. And same thing we just talked about. You pull back into your Fibonacci zone, your ambush zone. You get an opportunity to get short. Target 1, target 2, target 3 is down here, right? You see it on the chart. So let's just zoom over. What happened? How beautiful is this? Right? Pretty amazing how these levels work. But we got a couple different things going on here, and I want to just point them out, pull them all out, because this is how you can maximize your profits. You have to keep some larger time frames in mind. But let me just show you what's going on. So we have the FOMC. We were in chop. We had a measured move. You have an opportunity to trade in the direction of the FOMC move, getting in off this Fibonacci ambush zone. You have a target 1. This is on a shorter term trade, just based off that. You have a target 2. And you have a target 3. That's based just off this move that was going on with the FOMC. I'm going to get rid of that move for now. Let's ignore that. Let's say you traded that, or you at least traded in the direction of it. But remember this bigger picture move? Remember that old floor we had from way back here? This white dashed line? Well, guess what? That white dashed line is still in play. Let's just scoot over here. And what finally happened right here? We broke that floor. So we're going to have a new active fractal up higher. So let's just move that floor down and stair step with it here. But also remember, we did have a target 1 was that old floor. So there's target 1. Target 2, the 23%, is right here. Let me just move this chart up. And target 3, right? So target 1 was the old swing low. This goes back to a fib that was a week long in the making, coming off of last week. Target 2 and target 3. Isn't that amazing? And what's beautiful about this, I give these levels to our members every day. These are our pivot levels. These are like profit taking levels and where markets are going to react. And part of that comes off this Fibonacci analysis. There's a lot more to it than just Fib analysis, but that's how we come up with these key areas, right? We're doing this analysis on multiple time frames and sharing that with our members. That's called our daily pivot levels, and they show up on the charts every day. And if you don't use NinjaTrader, you can get them on. We provide them live, or we provide the levels in the morning, so you can put them on your own charts manually. But anyway, so that's pretty cool. Now I'm just going to go remove this again to clear up the chart. But that was this original fib stuff, right? This original swing. That's our current active fractal, and when we broke the floor. So now we got to bring this active fractal over somewhere over here to the right and identify it, because remember, we broke this floor now. I'm going to go ahead and delete this. Obviously, you saw how we hit those targets. But let's get over here to the breakdown where we break down the floor. Let's get our active fractal set in place. Okay, here's the active fractal. Let's get it set in place. So we have a floor that we broke. So this was when we broke that floor. The active fractal would be the new active fractal would be the FOMC high, right? That's your high prior to us breaking this floor, which at the time was right here, right? So once we broke through that floor, this becomes your most active swing high point. But now we broke through the floor and bounced, so the floor moves down, and you bounced off of that floor. So when you break through this new floor right here, going into Thursday's open, now your active fractal becomes this little swing high point right here. It moves all the way down to there. So we are still in a downtrend, folks. We made a new floor. I can't tell where this is. I'm going to say it's probably somewhere in there. Right? We made a new floor. That's the swing high. We bounce. Once we break this new floor, this becomes your swing high point. I'm looking at this candle right here when we break through here. So then we push down, put in a new floor. The market bounces. When it breaks that floor, you bring down your active fractal. Now, our tool does this automatically for you, by the way. for those of you that trade on a shorter time frame, our ultimate fractal tool keeps track of these swing highs, swing lows, and it draws these lines in for you. But I'm just showing you how to do it manually. This is how you got to think about the market. And I'm not going to step through any more of these fibs. We'll just do one more quick exercise on the fibs, right? So as you're tracking these directions, you go swing high, swing low, bounce into your fib zone, target 1, target 2. You can keep dragging these down, right? So you can do a continuation move every time you get a measured move and it bounces in and you break. Now here it doesn't bounce back, so you just keep pulling it down, pulling it down, pulling it down, pulling it down. All right. Here, this bounces in. Notice this level, 38%. Notice that was one of our key levels going into Thursday. This green line matches up with it. So you can look at the longer one, and you can also be looking at each one of these shorter ones, like I showed you earlier, and see where your overlap is. It bounces into the 78%, target 1, target 2, and we call this confluence when you have multiple swings getting levels to line up. So this becomes a very key level down here because it's a T3 on this short move from Thursday bounce into the 78, but it's also a T2 off of the FOMC high to low bounce into the 38%. You see that? See how this becomes a really key level? That's a confluence of multiple time frame fibs overlapping each other. So, but that's how you have to do it, right? If you're manually stepping through this stuff, that's what you're looking at. You're looking at these breakdown points, and you're just walking them through. Where is your active swing high point? When is your trend broken? Okay, so we can still be carrying, because these measured moves are hitting, you can still be made every time you hit a 23% target, you can pull this down to the next higher time frame. Again, coming off the FOMC high, as long as it bounces back in towards the 38% level, you can look for that next target. What did it do? On Thursday, overnight session, pulled back into the 38% fib level. T1 hit, T2 hit, and that's kind of where they were Friday. And obviously there's shorter time frame fibs all the way along. So, and there's no questioning that this level, right, this 23% fib high, T2 target off of the FOMC, right, that was a major point. I said we'd use it moving forward. When it spiked up, we didn't think so much of it, but moving forward, it becomes a swing point. That is your swing high of this Fibonacci move down, and then the market's strong to the downside, so you get that bounce only into the 38%, but they come over here and hit that target at the end of the day Friday. And so that's all you do. You just take these measured moves, you stay in the direction of the trend. Today I focused on showing you how you can get targets with a Fibonacci retracement tool. We also use symmetry targets with some Elliott wave techniques in our room, but don't want to go into that today. But let's just follow this active fractal down through. So you broke the floor here. Remember, that's why we have this active fractal swing point. So that's your pivot high. So let's go find out where our new floor is. So we come all the way down to here. The market bounces, and when it rolls over and breaks that floor, this becomes your active fractal here. All right, so going into this next Monday, let's just look at a few things. We broke the floor here on Friday, so we got to drag this down. So our new floor is down here around, I'm going to call it 2586. Where was your active swing high prior to breaking that floor? Right here. Okay. It was basically Friday's open that they came back and retested. Now we can take Fibonacci's and we can dissect Friday on its own. You came down, went up to your 78%, T1, T2, T3. You can take that measurement, pull it on down, measured move, came up into its 78% fib zone, retested the open, T1, T2, T3. Uh-oh, there's that low, right? So we can drag this all the way down. So you can watch these fib zones on the bounce. Now, isn't this crazy? I gave these levels on Friday before the market opened. And these levels came off of other things, not necessarily a fib retracement on this time frame. Or look, it definitely wasn't looking at this price action from Friday. But isn't that crazy how that Friday level matches up perfectly with that 50% fib that happened in the future at the time of printing that level? And it's a swing point that's going to more than likely come into play after the open Sunday night on the futures market. So let's watch this. So if you're seeing this video, just kind of make note of this. Make note of this active fractal high, which would be Friday's open, right around 2650. Make note of the current floor, and make note of the current Fibonacci move. Now, there's a couple other things I should point out to you in here, because it's more than likely going to happen. When you see this big, powerful move like this, we call these Fib extensions, and we'll save this for another day, but I'll give you a little teaser here. Take this low and draw the Fib down to this low, and just mark these levels on your charts for Monday or for the overnight session. Go ahead and mark 2601 quarter, 2606, 2610.75. That's this little intermediate. My guess is we're eventually going to get up to this level, okay? But your first reaction come Sunday night, if we don't gap up, if there's not any type of world news events, you're probably going to come into one of these levels right here, and oh my gosh, matches up with a level given before Friday's open. But you're probably going to see a reaction off the level there first before it makes its way up into one of these bigger picture levels. The trend doesn't change until you get through your active fractal, wherever that is after the new floor is made. So anyway, that's Coffee with Newbie Trader, Coffee and Charts. Hope you enjoyed the session. Hope you got something out of this. And look forward to getting with you again another Saturday. Please join us live so you can ask some questions. Otherwise, it's been Coffee and Charts, Newbie-Trader.com. I'm Matt Brown. Have a great day.